and then I would have about 15% in cash right now, because I really think things are at a very aggressive level, not just gold, but which is certainly was at 4,400. But I certainly think that a stock market which is very narrow in breadth. I know it's better than it was before, but when I started following the stock market, it was in the early 70s. I was 12 years old, but they called it the Nifty 50, and that preceded a pretty big correction down, a pretty big drop in 1974. But now we have the Nifty 7. I know it's a little bit broader than that now, but there's a huge difference.
It doesn't feel it sometimes.
Part of that is probably because of the concern about cockroaches. Let's listen to Jeffrey's take on the cockroaches.
You've had some of the issues around subprime auto, obviously, that we've all been focused on, wondering because of what Jamie Dimon said, there's never just one cockroach. You told me like 13 months ago that you were concerned, and this was out at Future Proof out in Huntington Beach. If you recall the conversation we had then, where I asked you, as everybody was talking about the prospects of a private credit bubble, you said you saw one. I'm wondering whether you now see the first cracks in it.
Well, there sometimes is one cockroach. I mean, that Silicon Valley Bank, that was sort of a one cockroach situation. A lot of people thought that was the beginning of something.
I mean, First Republic went down too.
I thought it might be contained, and turned out that was the case. But
yeah, because the Fed bailed everything out.
Weaker activity in parts of the lower tiers of the credit market, and there's been more than one sort of write-down or default scenario that's already occurring, and they seem to be occurring kind of in a cluster. It's not like there's one and then 6 months goes by and then you get another write-down somewhere. They seem to be happening in a cluster, kind of like the layoffs are starting to happen in a cluster. So I think that private markets broadly have stopped outperforming public markets. That's certainly been the case in recent times with the public markets doing so well. I just think that there's going to be a liquidation that will occur in the next significant economic weakness period that is going to be surprising to people how much selling and unwinding there's going to be of what I think is an overinvestment in these private markets, both private equity and private credit.
That doesn't sound very bullish, that there'll be a liquidation in private markets because of an overinvestment into some of these private leverage deals. What he's referencing is a lot of these are highly leveraged private credit funds in arcane financial instruments where people don't even know anymore what they're investing in. They're just investing in some kind of random product because it's like, oh yeah, some banker told us we were going to get some, really good return on our money. Sometimes I feel like people don't even know that their money is in these products. It's kind of scary. And so this is where Jeffrey's like, hey, if you're in some of these arcane assets, maybe it's time to diversify out. That's personally what, I look at this, I mean, he's kind of right. Equity valuations, asset valuations everywhere are kind of high. It's one of the reasons I love so much what we're doing with House I Can Reinvest, because our valuation is based on August 2024 as just a real estate company. And now here we are coming out with an AI product, in the next few weeks. That's not in our valuation at all. So we think we're a real estate-backed AI opportunity that's trading at old valuations, whereas everything else is mega high. And here's Jeffrey going, get out of private credit, these private debt, opportunities. The bankers are pitching. We saw what happened with Tricolor. Let's see exactly what he says. So I think he's got some interesting insight. I think he suggests there could be a rush for the exits here.
Major asset pools that have got themselves into illiquid
this is cool. This way I can directly
because of
pull
significant investment in private markets, and they don't have any money. That was famously Harvard University back when they were getting, their donors were pulling back because it was going on campus. I think Yale's been talking about liquidating some of their private equity interests and the like. And that's usually the sign of overinvestment, and the liquidity will dry up and it will turn into sort of a liquidation cycle. That's my map. I don't think it has to happen this week, but it's been a process that's been developing over the course of this year. But I think that's going to be at the foundations of the next kind of financial problem. that we
crisis
have in the United States, and perhaps beyond the United States borders, but certainly
it'll ripple everywhere
in that category. So I caution investors. I think if you have liquidity options, some funds, they allow a liquidity option. They'll give you a mark periodically on their private credit book, and if they allow a partial redemption and you don't see any degradation in the marks on the private pools, I would take advantage of that liquidity function, because I think
basically
get out, getting out at a better level than you'd be able to get out at in future quarters. So I'm very focused on private credit being an issue.
Okay.
Wow.
We'll follow that. There's certainly a lot of focus on it. You've given our viewers a lot to think about today and plenty of actionable ideas.
Yeah, and the fact of the matter is, with these private credit profiles, these are often funds that you can get into, and what they do is they allow a certain amount of liquidity per quarter when you're investing in a fund as opposed to like a company, right?
Okay. Enough about private credit. If you guys have any questions, comments, drop those on YouTube. Otherwise, we'll drop into a little breakdown here. Looking at Seagate. Amazon and Apple went up as well. Apple's up, Amazon is up a lot. Amazon and Google. Of course, Nvidia up a ton. Okay. All right. I don't see any questions right now. So, breakdown time. If you missed, I can't do it with a straight face. I have to start with there is one stock. All right. Here goes. There is one stock to buy if you missed Nvidia. Nvidia broke its $200 level on their Global Technology Conference day. Trump and Xi are in agreement about shipping soybeans from the US to China for the next few years. Relations are strong even after we've gapped up in the market 5 days in a row. The ticker to watch is not Nvidia. It is a cloud storage company. It's STX Seagate. All of this AI, all of this data needs to be stored somewhere. And this company, Seagate, just beat on earnings and revenue. And they have one hyperscaler customer. They didn't name who it was, but they spent a lot on hard drives. This isn't financial advice. Let's jump into the charts right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is a little info about Seagate's recent results. We can see it on the chart. It's $2.61. That's the beat. Right here. Earnings per share is $2.61. So obviously this is wrong. This is for Q3 of 2025. Yeah, for the quarter ending, whatever. The earnings that just happened, they have a lot of revenue, 2.6 billion, 21% year-over-year beat. So they beat on earnings per share and beat on revenue. They also have strong guidance. So basically everything good about earnings that you could have, they had. And if you look at the stock price, it acted that way. It's over this peak at 270. And if we look out on a 5-year chart, this thing is parabolic. If we look at just the last few months, it did go up in September with the whole market and came down after their dividend, and it's kind of offering an opportunity to buy. Now, why Seagate? Why this company that went from 75 to 280? Well, a lot of companies went up with NVIDIA during that period after the tariff lows. Not just hyperscalers like Google, like Amazon, even to some extent. You can't predict these earnings reactions. Some people say they can, but this was pretty difficult to predict. This was the Meta tax hit they took on this earnings. So, if you miss a move like NVIDIA, if you miss this breakout, that's perfectly normal. If you miss Palantir, that's perfectly normal, this breakout. You can't always predict these. All you can do is get in at favorable opportunities. And I think right now is an opportunity, because once earnings reactions are in, then you can buy risking where all this volume is here on this big candle. At risk $5, try to make 15 to 30 bucks. So we saw kind of the opportunities here. GM, one of those opportunities, coming back a little, but IBM, another one. Big rebound, can risk this level. If we go back to last quarter, here's sort of another one that I actually took here. So you can buy it after earnings, and the thing sometimes just goes up, okay? Sometimes, of course, it fails. Sometimes you get a weird reaction like Tesla. Tesla's still looking, like it's holding up here, but certainly not the easiest. Sold off, came back, started to break out over that 450 important level that it has to hold, and then rolling back over. So why am I talking about Seagate? Well, because unlike a lot of other companies, like let's say Joby, okay, this is this vertical aircraft company, chart looks great. Firming up in this sort of flag where you'd want to buy it. But earnings is next week. Same situation with this uranium company. Uranium is super important for nuclear. There's a lot of companies that are in this basket. URG, ASPI are smaller ones, but UUUU is setting up here. But even still, can't buy it because earnings is just around the corner. So for that reason, Seagate just had earnings. The earnings reaction is clean. It's not one of these messy reactions, a downward reaction like Netflix, a terrible reaction like FI or LRN, and it's not a whipsaw reaction like IBM or Tesla that I just looked at. So Seagate has a clean reaction. GH is a similar one. I'm talking about all these different tickers in different sectors because they all have earnings in common. And what tends to happen is the market takes the momentum from earnings. So if earnings season is just so-so, there's not a lot of follow-through. And we saw that in Q2, where really Reddit was the only solid earnings reaction in the beginning of August. And if you look at a consumer company like Spotify that just went sideways, and then you look at the market during August, it really basically went sideways for a month until September. I mean, yes, there was some higher lows, but due to this drop right at the beginning, it pretty much gained, I don't know, maybe 1% that entire month. So there's not much to do during that time. So right now we're at an interesting time. Sell off 2 Fridays ago on the rare earth. Back and forth between Trump and Xi, and then Trump and Xi met again up here, and they're getting their soybean deal together. So Of course, we just went up 5 days in a row, so this little pullback is fine, even though it seems like everything's good. If anything, there's going to be less tariffs on China in the near term based on what is coming out of their meeting. So with all that said, this is the opportunity that screams out right now. You can look at these other companies, WDC as well, to give an indication of this theme of storage. Pretty beautiful chart, but again, you didn't know, I didn't know that this earnings was going to be good. Looks like it's going to be good. Still has to close. This candle has to close. So this just happened, you know, as I'm making this video and after hours. So maybe tomorrow it'll close, give an opportunity. And, you know, SanDisk has earnings coming up in about a week. So this one is difficult to buy because how much more can you really expect after a run like this? So in my opinion, you do want to watch these other hard drive companies, Western Digital, SanDisk, but Seagate is the move. And if we look into a little more details about what they're up to, this is it. I mean, it's the story of the market for the past year, 2 years, 3 years. It's AI data center storage demand. And this narrative just continues and continues, given that OpenAI is now talking about going public. OpenAI just had that agreement, that pact with Microsoft. The details are ironed out. Microsoft stock didn't react super well to that, surprisingly. You would think they would just be screaming from the hills about how favorable that deal is for them. They get 27%-ish of OpenAI. The OpenAI employees get liquidity. They can sell their shares, which makes the employees happy, so they want to keep working there. Or, you know, they cash out. But what you don't want is employees leaving because they don't trust that they're going to be able to get money for their shares. So OpenAI employees get a third of the company. Microsoft gets a third of the company. The OpenAI nonprofit holds a third of the company. Sam Altman gets no shares at all. Like I said, OpenAI might go public. All of this is bullish for all of the data center companies that serve the OpenAI master. And OpenAI really is the master for the reason that these big companies, you know, their clients, I mean, Microsoft has consumer clients, but for example, NVIDIA has 5 clients, right? Microsoft, Meta, AWS, Apple, Amazon, you know, those are the big dogs. And OpenAI has 900 million clients, users, right? And so even though they're not profitable, they still have a ton of leverage for that reason. So they might be perfectly suited to go to an IPO. And if they do IPO at $1 trillion, their private valuation of $500 billion, which the secondary is currently being sold at, which is already a step up from the last round they did in the mid $100 billions. All of this is saying this whole AI bubble is still real. And as long as these companies have free cash flow and they're not buying back their stock, they're instead spending it on capital expenditures. They're spending it on data centers, that they're bookings of GPUs for the future. They're not taking on debt. So I'm not sure a bubble is the right word. So with all that backdrop, this is the play. Earnings and sales are strong. Guidance is strong. Clear level over this left side peak of 260 and clear level of this high volume day. Here's the high volume of a little over that 265. So that's the idea, STX Seagate. If you like these ideas, hit the like button. If you want to see more, hit that subscribe. And if you want to work with me, head to stockscommunity.com and I will see you in the Discord as soon as you check that out. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
What else has Kevin got cooking here?
So you invest in a public stock, you just swipe up or whatever, buy or sell stock. You invest in a private company, you might buy shares or convertible bonds in a private company. But you're choosing that company, so you know the assets that company has, the balance sheets that company has, whatever. Like, Househack, for example, we don't have any bank debt. You can see our public balance sheet, whatever. You go to reinvest.co, you read the offering circular, househack.com, whatever. It's the same company. But these private credit funds, what happens with them is usually you'll have windows where you can exit a private opportunity. But they'll only allow a certain amount of liquidation per quarter. So we saw this, or we regularly see this anytime there's a crisis where you'll say BlackRock or Blackstone or whatever, they'll say, oh, okay, we're at max redemptions for the quarter. So if you're trying to get out, you're going to have to wait for the next quarter. You have to wait for the next quarter. And they do that to butter out redemptions. But it has some serious potential risk factors, because what happens if you then get stuck holding the bag? And as Jeffrey Gondluck says, what happens when people see or start getting more nervous about other cockroaches, then liquidity dries up. Remember, you can't sell if there's no buyer. That's why sometimes order books can get destroyed so quickly. People think that these stock prices or crypto prices are stable. They're not. They're entirely based on somebody else being willing to buy. Why does Fiserv go down 44%? Because a lot of people got spooked and there just weren't buyers lined up. So what happens? The order book gets chewed through. It's the same reason why when things start going down, alts like altcoins, certain cryptocurrencies or tokens plummet, because there just aren't that many buyers in a crisis who are going to go buy Fartcoin or whatever it is. So the smaller or more arcane the product is, the more rapid the unwinding. Like, who wakes up in the morning and goes, yeah, I'm going to go invest in Fiserv? Sure, they might be a big core financial plumbing, participant, but that doesn't mean there's such a big participant in the economy that people wake up and go, I want to buy the dip on that stock. Almost any other stock that we have up on screen, whether it's favorite of ours like Axon, or whether, somebody wants to go buy the dip on the Qs, or Meta, or Microsoft, or Google. Google's actually up 5%, or whatever. They're joining the FOMO in on Google, whatever it is. You have buyers ready to buy because these are such household names. When there are no buyers and people are wanting to sell, valuations collapse really, really rapidly. And I think that's why we look at that IMF report, and I certainly scratch my head at that IMF report, because the IMF report tells us, the whole foundation of this report is the Global Financial Stability Report, and they talk about the shifting ground beneath the calm. And they take a lot of time to discuss the problem with private credit markets and how much money has now been exposed to private credit. But not only that, they also talk about the market basically ignoring the potential effects of tariffs on inflation and growth. I suppose it could also be an either or. And that sort of ignoring is a potential red flag. Not only that, but then you've got fiscal deficits at governments, which is another crucial sign. Their three things are tariffs, fiscal deficits, and then private credit. Private credit.
Okay, my brain is melting. Let's talk about some oil company, FTI. So they do oil rig manufacturing. Floating offshore wind. Pretty solid. OLL, NOV, BKR. NOV, OLL, BKR. Get it? Tailwinds for floating wind rigs. Oil prices. So if oil prices go down, then they're not going to get as much oil because they have a lot. Doesn't make any sense. So oil went down a bunch in early April. Does that make any sense? That went down too. It just skyrocketed since then. I don't know if there's a connection there. Just going to ignore that because that doesn't seem to be the case. Hundreds of millions of dollars, though, in Amazon for tomorrow. I would let it close. Let the candle close. Yeah. Because it could pull back a little like Google pulled back, right? And then if you look at some of these reactions are just pretty messy. Microsoft bounced and then sold off. Like, it just is messy. So that is my answer. Himanshuajua official 7813. All right. FCI. Here we go. Offshore subsea oil rig builds. This is like so different than so many other companies. $1 billion for this Total Energies multi-hundred million contract with Shell and a contract with BP. Okay. FTI just had earnings. Earnings beat. You can do better than that. Earnings beat and what? What did revenue beat? Revenue's up. What about guidance? Well, that's pretty good. Higher earnings and higher revenue. Yeah, I did answer that question about Amazon just a bit ago. I'll type it in too on YouTube for people who are joining later. Wait until it closes tomorrow, in my opinion. Okay. What does FTI stand for? Because it says it's Technip FMC. Technip. French American UK domiciled global oil and gas company. Oh, I see. It's a combination. There's no way they actually use AI. Well, predictive maintenance and automated systems, virtual replicas, visualize and analyze. Visualize and analyze their rigs. Predictive maintenance is real. Okay. So what do we got cooking here? Talked about if you missed Amazon, there's STX. The stock will surprise everyone. They could. They definitely could. No problem. Himanshua. Okay. Technip FMC. This stock will surprise everyone. The ticker is FTI. It's Technip FMC. It's a mouthful. It's a combination of a French and American oil and gas company that's now located in the UK. They have revenues in the tens of billions, over 10 billion. And revenue is up year over year. Earnings per share is up year over year. They have multi-$100 million contracts with Shell and BP. And they're using AI for predictive maintenance for their offshore oil and wind farm rigs, as well as to simulate basically what those rigs look like and, you know, what could happen to them if they're out there for a long time. I don't totally understand how this is really AI, but we're using AI for everything these days, so they're trying as well. Let's jump into the chart. This is a surprise stock. I've never heard of it, but the chart looks great and the earnings results look awesome. This is not financial advice. Here we go.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is how they're using the AI. Predictive maintenance, I get that. That's a real thing. You basically can put sensors down, underwater sensors, I guess, in this case, on your oil rig, literally the rig. And they're also using it, though, to create like a simulation of the rigs. And then I guess we're going to call that AI. I get, it's definitely an attempt to jump on the bandwagon, but that's not really why this company is so interesting. It's interesting because this Q3 revenue is up year over year, and the earnings per share beat as well. So they did get this, analyst upgrade from Citi. So that's a real company. It's higher than the current price, and this is the chart, and this is the reaction. So it came out of this little flag after earnings, and there is an opportunity to get it. Maybe it'll come back and give an even more favorable buy opportunity off this sort of $41 shelf, no pun intended. And this oil company is up a lot since April, 70%. And I was trying to sort of, rectify that with the price of oil going down, since that you would think they would be a little more closely linked. But there's some other tailwinds. So these are the tailwinds for the sector. There's a lot of tailwinds. And they're also using those rigs for wind farms as well. So they're not as exposed to just the price of oil. There's a lot of CapEx in oil field services. That's what I guess this is called, the actual manufactured rigs and wind farm subsea infrastructure. The market's expected to grow. It's up to almost 50 billion in the next couple of years. So this isn't like the $1 trillion AI spend market, but you know what? There's just not a lot of opportunities to just throw money at Nvidia when it's all the way up over $200 when earnings are coming up. If you want to bet on these AI companies, well, sometimes you're going to get hit by unexpected tax sort of recognitions. That's why Meta's down. And if you want to get into the speculation names, I mean, some of them are okay. Applied Digital is an opportunity up here. But even the opportunities are up a lot already, 700%. And if you try to get in some of the, picks and shovels, Oracle, which houses the servers, they had in here news come out that they don't have as much of a margin as was expected. And since then, they've just sort of drifted down after initially there was, good solid earnings. And then turns out this thing is down. So that needs to turn up for NBIS to turn up. And then in terms of other AI related companies, I'm talking about this just to highlight how it's good to give these a rest. CoreWeave holding in here, this thing just can't go. And it just came out that Core Scientific is not going to be acquired. They voted not to get acquired by CoreWeave. So that's bearish for CoreWeave, maybe bullish for Cores. It's up above that acquisition price, which was in here. This was to sell the news on that. And so now CoreWeave isn't going up. CoreWeave has earnings coming up. All this to say, maybe you have to look over at some different stocks. And if you look at ExxonMobil, yeah, this thing is slow. Put it in your grandma's portfolio. It moves 1% a day. But there are some opportunities over in oil that do move. This is 4% a day. This earnings reaction is solid. Here you can see how it just marched up after that. This is the kind of move you like to see on earnings. It's a high volume day. And sure, it gave back a little, some profit taking, but since it got over that level, this is why so often this close on earnings day is so powerful. As a high volume, there's a high volume day here. This is the close, and you can see that level just held, pretty much held. I mean, it went below a little, and then just took off. So that's why you can risk a little, make a lot. And I do think this breakout in an environment where breakouts are not really working. I mean, we'll see, but AVAV looks like this might not, be materializing. And then some of these companies have gone absolutely euphoric. These uranium companies, what are you going to do? Buy this up here on this sort of bounce? This is probably going to roll over. So there's only so many different parts of the AI stack, nuclear. This is pretty much as many as I can think of. The connectivity, LUMN, you're definitely not going to buy that at this point. So that's pretty much every piece of the AI stack I can think of. Connectivity, power, other power generation, VST, GEV. These are not super constructive. They're kind of sloping down, if anything. MicroStrategy, they just keep diluting this, selling their shares to buy Bitcoin, I guess. So you have to look in different places to get creative here. And I think FTI is the place to look. So this is that recovery, this is the level, and you break out from there. So a little bit more about, and just to check in on MicroStrategy, I mean, Bitcoin does not look so hot. Ethereum not really looking great either. So that's why we're talking about this. That seems important to set the stage for why we're talking about an entire market that's only 50 billion. Because that's where the money, the money has to flow into something. It's not in gold anymore. I mean, gold sold off. Maybe it'll, it's always a safe haven, but maybe it'll bounce here. Maybe it won't. These gold miners, if earnings coming up, but I don't want to buy that before earnings, right? I mean, it just came down a lot. So everything's sort of taking a breather, and, quantum, just to round that out, no exception as well. Rare earths as well. Like this is quite the move down. So FDI is the idea, and I promise not to look at any other companies till we finish out and explain why I'm looking at this one right now. There is some just more investment here, and it seems like people are generally focusing on this. There's a lot of sort of requests for proposals, I guess, lots of money flowing in here, and the more contractors are trained for this, the more that they can install these systems. So, you know, I'm not saying hold this for the next year or not. I'm just saying that if there is a company to buy in subsea systems, which again is a newish sector to me, this seems like the best looking company. So it's other companies that you want to look at are on drilling, maybe repairing the rigs, renting the equipment, or having the geologic, the well expertise. But in terms of actually building up the rigs, I think FTI seems like it's the one to look at. So these are the ones that you may have heard of. Halliburton, I had heard of, right? The contractor that, is associated with war as well, but they're all turning up. So if you look at Halliburton, if you look at OLL, NOV, sort of turning up. BKR, I think that's not quite right, was it? Yeah, BKR, Baker Hughes, also turning up as well. So there's definitely interest in these companies. They move a little bit slow, a little bit choppy to get into, but a ton of liquidity. I mean, $500 million a day. This earnings reaction is a little messy, so I do think this is the cleanest earnings reaction that I saw in this sector. And if you just follow these along, this is OII, that's why I couldn't find it. Yeah, they're up since the Terra flows. Another messy earnings reaction, but this seems to be the place to speculate. And I think it's one of the safer sectors to speculate in right now, given that the earnings were so strong. Improving profitability, big contracts that I mentioned. Here are some of the different, this is the actual merger. They did have a contract with BP and Shell up here. This is the bigger contract. It's over $1 billion. I just didn't recognize this name, Total Energies. So that's their biggest contract. But yeah, they did also have the BP contract as well as names that are more familiar, Shell. So it's certainly in the discussion with the big companies that we know as consumers buying gas. So I think it's worth looking at, even though it's not actually located in the US. It's just on the, what is it, the NASDAQ? The New York Stock Exchange, okay? And working with the huge companies that we are familiar with. XOM, again, you can buy a stock like this, but I mean, you'd have to wait for this to have earnings. And again, it just moves so slowly. So FDI is the ticker. If you like these ideas, hit that like button. There are a lot of stocks cooling off right now. A lot of stocks going through the middle of earnings. So September was crazy in terms of opportunities. It's kind of time to chill a little bit, but it's still a bull market. If you want to see more videos, hit that subscribe button. I'll keep coming up with ideas. And if you want to work with me, head over to stockscommunity.com. And if you're in there, I'll see you in the Discord tomorrow morning. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. What else have we got cooking here?
By the way, this non-financial intermediaries, NBFIs, that being the particularly scary one, where they say 90% of the lending to these non-financial intermediaries is from big banks. But big banks are globally and systemically important. You know, we call them the G-SIBs, which if they are the ones that are throwing money, let's say, at these non-bank financial intermediaries, and, you know, we now have high allocations to assets that might have really bad collateral support. So in other words, the underlying value of the bonds or debts go to poop. Then you could have quote unquote severe dislocations. And maybe the reason we haven't seen that, you know, during liberation was because it was such a short period of time that we got liberated compared to, let's say, March of 2020, where we had many more weeks of pain. But non-financial or non-bank financial intermediaries could amplify market stress from the side of leveraged funds that so far was limited in April of 2025, but basically could become an issue again over time, especially when we look at banks and we see, wow, you know, banks are increasingly lending to private credit funds because these loans offer higher returns on equity than traditional commercial and industrial lending. 5 large fund managers account for 1/3 of aggregate loan commitments. Banks lend to a variety of these, and bank exposure is pretty large at 9% of bank portfolios, totaling $4.5 trillion. So what happens when that $4.5 trillion, people to go look at the underlying assets and they're like, oh, wow, it's just, you know, a First Brands, like the underlying collateral is absolute trash. Well, you know, then you have big poopsie doopsies. So while large banks serve as primary lenders to non-bank financial intermediaries, accounting for 90% of all lending to these, exposure concentration is more large among large, or is more severe amongst large regional banks and those with assets under 100 bill. And they go as far as suggesting that some of these companies might not be able to actually fund the amount of withdrawals that could come to these banks. That as many as 4% of US banks might not have enough liquid assets to actually pay people's outflows. So you could end up having Silicon Valley style stresses hit again, and stress tests aren't actually monitoring these correctly because, first of all, the IMF isn't even going to consider what happens if banks potentially go bankrupt. They literally say we don't even consider the solvency of these banks. But a lot of banks do not have the reserve ratios in the event we end up going into some kind of liquidity crisis because of this private credit cockroach situation. So people think the banking system is sound and resilient because that's what, you know, Jerome Powell always tells us. And, you know, that might be wrong. So kind of a crazy environment we're in. And so I think Jeffrey's kind of right to think about, you know, check where your money is. If your money's sitting with some bankers and you don't really know what's backing up your assets, maybe it's time to diversify a little bit into at least where you know or sort of trust the underlying assets.
Why not advertise these things that you told us?
Folks, this one stock might change early buyers' lives. In today's video, we're going to break down the latest on the market and plays. And then we're going to go on to this one stock that I believe has extreme potential. This is a company that I'd argue is set to get a ton of traction and coverage over the coming weeks and months because of its close connection to the president and his administration. This company sports a major government contract, is linked to the president's son directly, has a massive competitive moat around it, and has tons of potential upcoming catalysts that I've identified for you. I'm going to present my case for it as well as the risks to consider, and I'm going to let you be the judge. And of course, as always, if you're the one taking the ultimate risk, you've got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Remember, lots of people get frisky without thinking about their risky, and vice versa. Big problem. Okay, let's start with the market context. So the biggest theme we've seen play out this year again and again is disbelief, avoidance, and really utter hate for the stock market's uptrending this year. So many big major fund managers all across Wall Street absolutely are pissed that the stock market has returned as much as it has this year. If you recall back at the very beginning of this year, we were told by nearly all of the financial media outlets and financial experts and fund managers that 2025 was going to be the year of a major recession, a massive, unprecedented market crash that won't recover for decades, and we were told that buying the dip in April would be the biggest mistake of our lifetimes. Now, of course, for folks who follow this channel, and really for any folks that weren't headline jockeys, well, obviously this has been an unprecedented successful year. In fact, there's hundreds and hundreds of companies, specifically in the AI space and the rare earth component segments, that have had double or triple or quadruples, many of which we called out here on this channel, and there's also many more outside of the scope of what we've covered. Now, that being said, just because things have gone up doesn't mean they're going to continue, and it's very, very important to make sure that you're buying good assets. And in my opinion, when it comes to outperformance in a market that's already up so much, it's very, very important to focus on three different segments. Companies directly serving the AI arms race, companies getting new U.S. government contracts / stakes / backing, financing, so on and so forth, or companies that fall into both categories. Now, of course, we've been working hard all year to give you these ideas both here and on the Discord, and we're going to continue to do so. But today we got to start you with quantum. So last week it came out that the Trump administration was in talks to take stakes in quantum computing firms, and this is from the Wall Street Journal. And then those stocks, like our favorites and others, RGTI, QBTS, QUBT, IonQ, and others, subsequently rallied massively. And then the White House came out afterwards and denied being in talks to take an equity stake. However, once that news dropped, prices barely went down. Why? Well, I think it's because markets don't think that the White House is going to miss taking a stake in quantum. I think markets still believe there's going to be a partnership, stake in some form, and or other deals for quantum in the future, and they're trying to position accordingly. Trump has indeed already signed deals promoting investment into quantum, and considering that China is pouring public investment into the speculative next-gen computing space, well, many expect Trump to eventually do the same as well. Now, one of the things that a lot of folks don't understand about quantum is that quantum is very, very early stage technology. The use cases are limited. It's really just an AI arms race component. It's one of the battlefields, I should say, of the AI arms race. It's a sector that's going up because there's tons of investment, not because there's real-world use cases today. Quantum stocks have been a hugely followed sector all year, and the top performers, QBTS and RGTI, we actually called out at very, very small fractions of the current trading prices because we believed and we continue to believe very strongly that while quantum is early stage and is far away from most regular use cases, it will continue to see investment because it is a front on the AI arms race. If you go back to my videos all year, you could find many companies, including RGTI, QBTS, QUBT, that many folks said can't go up because, the technology is too early. But what I think a lot of people don't realize is that folks are buying the stock in anticipation of big government backing down the road. We've called out a lot of the government backing stocks before the government even officially announced them being backed. And I think you're eventually going to see specific quantum stocks be added to that list. And it's probably going to be during a cycle where nobody is even talking about quantum and quantum stocks are down so that the government can get a better deal in terms of entry price. There's a reason that you're seeing big banks like JP Morgan invest in this segment. There's a reason why more and more people are talking about quantum. And it's not because the use cases are here today, tomorrow, or next month. It's because they're expecting more investment down the road from other players. Buying quantum today might have been like buying next-gen GPUs 15 years ago. Now look, you're going to be hearing more and more about quantum this week because NVIDIA's GTC conference starts this week and there's going to be a bunch of quantum presentations. And most importantly, you're going to want to pay attention to CCCX this week. Why? Because CCCX is the SPAC that is set to take Inflection public, and Inflection CEO Matthew Kinsella is speaking this week at NVIDIA's GTC. Tuesday, you're going to see a huge spotlight on Inflection and, by extension, CCCX. But what exactly is Inflection? Inflection builds quantum computers and sensors using neutral atom technology, which traps and controls atoms with lasers to perform quantum operations. Why does this matter in English, Charlie? Well, their tech can power quantum computing, navigation, and defense applications, from super precise clocks to next-gen AI simulations. Now, when you talk about proof of concept and their relationship with NVIDIA, not only does this company already make tens of millions of dollars worth of revenue, but Inflection works directly with NVIDIA's CUDA-Q platform using NVIDIA GPUs for hybrid quantum classical computing. Inflection aims for 1,000 logistical qubits by 2030, positioning
revenues up. Earnings beat. Okay. If you have any comments, drop those in the live. Otherwise, we'll get going here. Jeez. Louise. $3 billion. So if there's a I guess they're just better at mining copper. Peru and Mexico. Okay. Kind of a small company, but not really. A couple $100 million a day. Southern Copper. All right. Here goes. Comments on YouTube. Breakdown here. Trump's tariff stocks will make you rich. Why? Well, take this ticker, SCCO, Southern Copper. Initially, tariff talks made it so traders, there are literal traders, and similar to how they move soybeans, they move copper. And there's a lot of copper stockpiled in the US. So during those sort of rare earth talks, tariff talks, copper is a critical material. So there was concern that the US would not get as much access to copper from other countries. There's one company, Southern Copper, SCCO, that has a more efficient way to mine copper. They also have the ability to get copper from big mines in Mexico and Peru, and there's all green lights for getting that to the US right now. They have a beat on earnings this Q3. They also have higher revenue. So all the recipe is there for stock price go up. It's not a super exciting hyperscaler. It's not Amazon, which had earnings today. I think for Amazon, you need to let that cool off a little bit. Let it close and then buy it tomorrow. It's not Google, which just beat and then had some profit taking today. The AI hyperscaler Mag 7 companies are strong right now, with the exception of Meta. But I think the underlooked gem is in this case, materials, and specifically copper. So let's jump into the chart. This is not financial advice, but this is pretty interesting for a stock idea.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is the results, and this is what we're talking about in terms of a chart. It's pretty beautiful in terms of a flag coming into earnings and then the earnings working. So, you don't want to buy before earnings. That's what makes this difficult and not picture perfect, right? If it were picture perfect, earnings wouldn't have anything to do with this, and it would just break out, in a way you could buy it. You can't really bet on this. So now that it's up here, if it does take some more profit, there's an opportunity to buy with a really clean level here. So This is the company SCCO, Southern Copper. If you look on a 5-year chart, this is all-time highs over that 130 level. And right now, there's volume tapering off, which came into that breakout spot. So there's not like a clean level that I can say, buy it over this, because there's just not that much volume even on that particular earnings day. As compared to, some of these stocks, FTI, one I just looked at, there is a lot of volume, so you can sort of risk that level, and you can see how well that worked here. So this is the stock, Southern Copper. This is the revenue results. It's over $3 billion. It's up over 10% year over year, and they're just getting more efficient. So their operating cost per pound is, down 30-40%, whatever that is. It's down a lot. They do have a dividend, so it's a legitimate company in terms of $200 million, $100 million of liquidity a day, dollar volume. It's significant. And they do have this big $billion+ copper project in Peru, and they have this license. So that's sort of the big turning point for this company. The stock has gone up significantly. Even as, and this is interesting, someone who's super into futures can explain this to me, but basically this company is detached from copper prices for the most part. If copper prices just fell off a cliff, that would be a problem. But what happened here is basically when there's tariff talks, there's talks that maybe the US won't be able to get as much copper imported. So what happens is, in anticipation of that, is people stockpile copper. So the price does go up, and then it turns out that the result of the tariff talks in this case were that actually it's okay. They're going to be able to get copper imported. Suddenly, there's a whole bunch of supply that isn't going to be used. It's realized, and the price goes way down. So that's what happened here. That didn't, completely fall off the cliff. So there's still steady demand. But if this were to go down a lot, that would be a concern for SCCO. But in general, the trend is definitely up, even with that, sort of crazy tariff stockpile situation. And SCCO, if we look sort of in mid-June, there was a little bit of a sell-off there. There was this sell-off here in late March as well that you can sort of square to exactly right here. Not even sort of, that's exactly what happened. And then if we really want to look at the whole year, even though the last 30 days is basically what I end up looking at for levels, because most of these positions you only want to hold for 30 days or so, unless you can just trail half your position. There's a level. And so that's the idea. That's the earnings and sales. That's sort of the connection to copper prices. And as far as this company, Southern Copper, there are some other companies doing a similar thing. Obviously, this license to have over $1 billion copper mine in Peru is a big deal. As far as this project, I don't know the execution risks in Peru. There could be delays. There could be a lot of risk. It's not like investing in some U.S. Chip company that the government sort of has a very strong interest in propping up. The Stargate $500 billion project is the government directly helping with permitting for these AI data centers, as an example. Meanwhile, with this copper company, it's kind of like, playing defense against the government, it sounds like, with that tariff move down, or this sort of stockpile situation that happened here. So it's a little bit more speculative, but there's a lot of speculation names, that are far worse than this in terms of having no revenue, that have basically made people rich. I mean, people who bought Quantum here got a double, which is crazy. It was a $4 stock. became a $4D stock and then doubled. And, you know, quantum's not going to be real for 10 to 15 years, most likely. These nuclear stocks as well. This is the Sam Altman's back. Also crazy. Nuclear isn't going to happen for another 5 years. And this went from a $5 to $150 stock. So sure, this might be slightly speculative, but compared to those, I mean, they're actually mining copper and shipping it to the US. So these are sort of the group, FCX, Rio, and BHP. So that's FCX, nothing special there. Rio, liftoff for sure. Kind of slow moving, 3% a day, and BHP in that same category. Very sensitive to the market. And this isn't even a huge company. This is kind of the same, if not like smaller than SCCO, and not really setting up in a great way either. So this is kind of a technical setup that just so happens to sort of fall under the rare earth umbrella. Not that copper is a rare earth, but in terms of that same conversation of trade talks impacting a company, SCCO is definitely in that category. So why do we even need copper? Well, I mean, you probably heard of people, you know, going to junkyards and getting copper and stuff like that, but you need it for wiring, you need it for renewables, battery storage, even electric vehicles. So all of that is not talked about right now because everyone's talking about AI, but that build out is still upon us. I mean, the number of gas cars versus electric cars, totally still in the process of flipping. It's going to be years before that really, before gas guzzlers become the total minority. So yeah, there's challenges, but basically this is the GDP. This is the reason we have a GDP at all is these data centers this year. Otherwise the GDP would be 0.2%, right? That's what the data said from the well, when we had data, when the government was functioning. So if copper is needed for those, well, as long as that's still the economy, then we're going to need copper for that. And as far as this sort of strategic metal, I don't know. I can't really say anything crazy like that the government's going to take a stake in SCCO. You know, they did. Lithium is a little more, you know, lithium's used for electric vehicles as well. It's a little more rare, you know, in the rare earth category versus copper. So I don't know that it's necessarily going to have that same opportunity. But still, I mean, it's definitely in the conversation. So it's important to be aware of if the government, if Trump does start talking about metals as opposed to just rare earths. You know, lithium is a metal, I suppose, but, you know, more common metals. Then yes, then this is a commodity, right? I mean, we can literally look at the future prices for it. We can't look at the future prices for lithium. So that's sort of the giveaway. But that's the conversation that's important to be aware of if you're investing, taking a look at this company. SCCO is the ticker. There are, you know, sort of macro risks that are apply to all commodities and all futures. But in general, for our purposes, and, you know, not considering how the entire EV and grid and renewable build out is going to happen, all we really have to worry about, besides any crazy Trump or G comments about metals, is basically this is the chart. This is the copper prices. They haven't fallen off the cliff. And this is the earnings and sales. And it went up, and this is the price level. So that's the idea. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to work with me, head over. You can join the Discord for $25 and see you in there tomorrow.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. Let's go a little Christiania.
Get played if you want to go up to the DJ booth and say, hey man, play my song for me. You got time is what coach is trying to tell you. You got time because even though I'm the one that lay these plays out well in advance, I did this January 1st. I told you all of these levels. My final destination for NVIDIA is 230. Now, mind you, guys, if you're a long-term investor, this will go well beyond that. I'm talking about stuff that I can give you in the here and now that's attainable if you rock with me and if you walk it out with me, okay? I'm a technician, so I'm already looking at the market on your behalf, calling these plays out like I'm an offensive coordinator. In the bull market, I'm a defensive coordinator. In the bear market, okay? And I got my headset on and I'm just calling these plays, you know what I'm saying? And we just, you know what I'm saying, dinking and donking. We got the RPO game going. We got the quick game going. And, you know, now here it is. We done scored another touchdown. But we are going to run it up to 230 on NVIDIA, okay? So no, you didn't miss it. You're just missing all the other good stuff we've been doing because we've been in this since $98, $96 earlier this year. Now it's sitting at 201 when I told you this is going to 230. So at 230, I'm telling you, Coach going to be the first one to come on here and be like, hey, guys, I'm locking in my profit. I'll take profit along the way, okay? Just because I don't trust Wall Street. They do the rug pull. I don't like to be at 200. Then they come all the way back down to 160. And I could have did something at 200. You get what I'm saying? In terms of taking profit, selling some of my shares, selling some of my contracts. Does that make sense? And so NVIDIA got absolutely busy today. NVIDIA shares reached record high following the GTC conference. Look at this, man. They got all of this at your fingertips. It closed at a record high Tuesday as investors tuned into the company's GTC event. NVIDIA stock rose 5% to 20103 on Tuesday, a record high. This is going to 230 next, okay? Well, let me see what they're saying. AMD was down, Broadcom was up. NVIDIA closed with a market value of $4.9 trillion. Okay, so we're going to be a $5 trillion market cap. That's going to happen. Just missing the 205.76 level that would have given it that market cap. So I'm just telling you how momentum works, okay? We're going to hit 205.76, so that's some good money from here to there. But Coach is telling you we hitting 230. Follow what we call in the huddle for me, okay? And so, and then NVIDIA, you guys got to know, all right, enough is enough, okay? Not that it can't go for, now if you 10 years out and you holding it, all that, then disregard 230. You gonna go up, you gonna come all the way back down to 130, and you gonna just be for the roller coaster. I'm trying to teach you guys how to efficiently build wealth. I'm trying to teach you within a scope of time, okay? These plays can get to certain numbers, okay? This is a technical thing. I'm a technical expert, okay? So I'm not guessing. I'm not getting lucky. I do this, and I do it consistently, and I do it efficiently, and I do it for tens of thousands of people. So just, again, follow along for me as it relates to that, okay, guys? But nevertheless, man, buy every share of this you can. We still got both of our new targets set before us, okay? So that means you got time to shine with Coach. I'm going to always help you guys make some money. I'm going to always teach you the game, okay? That's my ode to you, okay? That's my promise to you guys, all right? So listen, man, we're going to get busy. Listen, speaking of getting busy, we got President Trump and the China president. They going to meet. So these are catalysts, okay? We got the ADP news coming out. That's going to be a catalyst. That's some pre-market action for you guys, okay? So you're going to have some things that's going to make the market gyrate a little bit. You stay the course, okay? You let them do their little dance. Remember, you sit back like this, like, okay, let me see what y'all doing. That's all you do. It's a game of patience. If you learn patience, if you learn to say, let me see what y'all up to. And listen to this. If you really give them 5 to 30 minutes, they'll show their hand. they'll show you what their hand is. They'll show you little things that you can take advantage of, okay? Learn to be patient. That's going to be the secret sauce to your success, okay? So listen, man, them two I got on my radar for you guys, especially if you're going to rock out with Coach for the 2600K challenge. Some stuff I want you in. Matter of fact, I'm going to give us the new NVIDIA play that I want you guys to know the strike price. I want you to know the expiration date and all that kind of stuff to choose for 2026, okay? But that's gonna come next video, so get ready. We gotta finish this year strong though, okay? And you got this right in front of you. This is going to 205 next, and then 230 after that. I told you, they're gonna catch AMD. They won't never let AMD be ahead of them, okay? Remember I taught you guys about family and cousins in the market? Apple and Microsoft, AMD, NVIDIA.
AMD definitely took off in a big way. Okay. Let's jump into a little breakdown here. A lot of drone stocks. RCAT, AVAV, KTOS, Pro, NA, table with revenue. I don't think D-Pro is going to stack up here, but they do have that Army contract. Department of Defense. Their platform was selected by a branch of the Department of Defense. Yeah. The contract funnel. Forward-looking funnel estimate. Okay. If you look at RCAT, I mean, that thing went nuts. I guess it's kind of similar, actually. Constructive. RCAT, UMAC, D-Pro. Why am I talking about UMAC? RCAT, AVAV, KTOS. KTOS is a big one. And AVAV is a big one. Kind of. 300 million. This is also 200 million. This is the smallest. Okay. D-Pro. Department of Defense. Contract. Let's see it. So they entered into a partnership with a defense logistics contractor selected by a branch. All right. Dragon. Dragonfly. How much should I call for tomorrow by noon EST? What does that mean? Okay. What is a defense logistics agency? Okay. There we go. Trump's drone stocks will make you rich. Trump signed an executive order supporting a lot of unmanned aerial systems companies and their eventual FAA certification. There's one company, Dragonfly, DPRO is the ticker, that has a contract with the Department of Defense and has a strategic partnership with a defense contractor. They're basically called a defense logistics agency prime contractor. So this isn't like the cream of the crop drone company. It's not like they have a ton of revenue. They're not KTOS or AVAV. They're more like an RCAT. But this company pulled back. There's enough liquidity. And when they had warrants exercised, which is a way to sweeten the deal for new investors, they can then exercise those warrants and get shares, and they might sell those shares. The price of the stock did not go down much, so that's good. It's good to know that these penny type stocks, when the dilution does hit the retail market, the stock price doesn't get crushed. So that's what we like as new shareholders or people who like this idea. So let's jump into it and let's see why I'm talking about this idea right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is not financial advice, but this is pretty good news. If they've been selected by a branch of the Department of Defense and they also have a partnership with a prime contractor, and they just raised 25 million. So this is the 25 million right here. And this is the warrant exercise a month later I was talking about for 450, another 15 million basically shares to people who were given warrants, which they can convert to shares. That was somewhere in here. Is that right? August 8th. So that was actually, that makes more sense, somewhere in here. So stock price came down a little bit, but there was a lot of euphoria in here, and that was not limited to DPRO. RCAT also went up, KTOS, big move up in September as well. And then AVAV, those are sort of the drone basket, up a lot now. So this one looking like it could roll over. I mean, these stocks are up a lot, and you also can't buy them right before earnings necessarily. The earnings for RCAT, for DPRO is a little bit later, November 11th, and also it's not clear that it's going to have a big effect, given that this is more of a speculative company. You can sort of expect the same thing for RCAT, where, you know, if we look at the actual, this is a $10 stock, right? If we look at the cash need, you know, they don't need much cash. They have several years of cash, but they also, you know, are not exactly turning a profit here. They have contracts with the Department of Defense. That's a big deal, but it would be greater to get a contract value. That would be definitely a better news, to get some disclosure there, and then sort of just figuring out if there are future offerings. You know, we saw that warrant exercise and how it affected the stock a little bit, but you always have to be careful with these penny stocks, to make sure you're on the ball if they do price an offering that creates a huge amount of new shares. So this is the company. These are the similar companies. RCAT is Red Cat. AVAV is AeroVironment. These are the big ones. This KTOS is the military defense play, and I don't necessarily see a link directly between Trump and Dragonfly, but the Department of Defense taking that stake, it basically indicates that this executive order is, well, not taking a stake, the agreement, the contract there, the choosing their UAV system indicates that that executive order is doing what it's supposed to do. So it's allowing these sort of startup drone companies to get in bed with the government. So we'll see if they release some contract values, but you know, they are announcing orders to this contractor. So it's not just a partnership sort of in a research capacity. And this number is pretty dubious, to be real with you. Contract funnel, this is a funnel estimate. So that's like a software as a service company, like making a $10 sale and then saying that, you know, by the end of the month, they expect that sale took 10 minutes. So there's, you know, 1,000 blocks of 10 minutes in a month. So they expect to make $10,000 that month. We'll see. We'll see. Okay. But this is kind of in the quantum basket. So we can compare the companies on their merits. And if we do that in terms of disclosed revenue, you'll basically see that 2 million is 20% year-over-year growth for Dragonfly. And it's similar to RCAT, Red Cat. And it's also similar in terms of, you know, Red Cat got selected for this program and they got a 2.5 million contract. So they're actually disclosing the contract. And, you know, Dragonfly got selected for this program again, strategic partnership. That contract value is not disclosed. But when you compare it to the big dogs, like if this is, you know, Rigetti, RGTI, or IONQ are the quantum names that are sort of small, and then you compare it to like IBM, which has been doing quantum for like 50 years or something. Granted, they have the research capacity to take on projects like that, but that's sort of like what KTOS is, with a billion of revenue, and then half of that is AVAV. So these are this is like the addressable market for Dragonfly. You can think of with $1 billion of backlog for AVAV. And same general situation, except KTOS is even more defense minded. So in a wartime situation, KTOS could definitely spike. It's not, you know, super politically correct or whatever to say that, but that's probably what's going to happen, right? Whereas AVAV, maybe it'll follow it, maybe it'll lag a little bit. And then as far as speculation money, RCAT, it's kind of just ugly, to be real. I mean, this is a choppy chart. It's hard to buy. DPRO just happens to follow a little bit more of a chart theme similar to these other speculation names. And what I mean is that people look, you know, at the actual chart. A lot of investors don't even know what RCAT is. They don't know about drones. They don't know that this is a drone company. And so if they see a chart like RGTI just making this sort of, and I'm victim to this too. Sometimes it's a good thing not to know. If you see a sort of flag forming, you don't have to know that this is a quantum company and quantum is the next hot thing. You know, it's on like the cover of all these magazines, and Jensen is talking about it, you know, in video conferences, even though sometimes in jest. And so sometimes you get these massive moves in companies that have no revenue. And that's kind of the argument for Dragonfly as well. I mean, lacking actual numbers, 2 million of revenue is not enough to make a stock go from 5 to 15, right? I mean, that's absolutely crazy. But these are holding in there. In terms of other speculation names, this is kind of similar actually to like the meme basket. So where there was GME, this is not the right time scale to be looking at GME, but if we look at a 5-year chart, you know, this thing went crazy at one point up to plus 100. There were some reverse splits as well, 4-to-1. So this was really like $500 back here. AMC, right? COS, was the headphone company, or whatever this is. Bed Bath and Beyond. That's Beyond Meat. Whatever it was. Oh yeah, BBY. These were all in the same basket, right? They had crazy spikes, and that's kind of the current basket. Is, you know, DPRO is maybe joining that. Another basket is Open Door Basket. Is kind of a charitable name for it. Sector is a charitable name for these sort of meme stocks. These are startups with, you know, serious people on the board, you know, from Silicon Valley, sort of like PayPal Mafia type people. But at the end of the day, you know, they didn't become 5 times more valuable over the course of a month. Like, that's crazy. And some of them don't have any revenue at all. Okla, which is the Sam Altman connection, being in that basket. So DPRO is also in that basket, had the big run in September when the market did, and still holding up. I think speculation money is largely going to leave these. Oklo, you know, may or may not hold up. Quantum, I definitely would not buy it here, even though it's sort of holding in here. Can't really short it, but I do think this drone company has a little bit more of a prayer. Open, don't really want to own this either, especially going into earnings. So not an easy breakout environment, but if you look at FTI, you know, there is hope. Companies are breaking out, and this company is actually up even more. Okay, this is just a print in after hours, so we can ignore that. But this is the company, DPRO, Dragonfly. Talked about the peers. RCAT is the closest one to look at. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to work with me and get the best idea of the day, I'll see you in Discord tomorrow morning.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's close it out here.
Lowe's, Home Depot. Remember these lessons? Go back and watch these videos, guys. I say this stuff out the gate so that you guys can begin to connect the dots. Okay, listen, we're going to get up out of here. We make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very consider the journey. Do me a favor. Don't forget, like, subscribe to the channel. Make sure you guys grab some free stocks using my link below. And I'll catch you guys in the next one. Peace.
Oops, a little delay
in itself is one of the top U.S. quantum hardware players alongside IonQ, Rigetti, and PSI Quantum. So backing up, what exactly does CCCX have to do with anything? Well, CCCX is what's called a SPAC. A SPAC is a blank check company that goes and basically buys up, engulfs a private company, and effectively takes it public. Now, the way that SPACs tend to trade is what? Well, usually you get a lot of anticipatory running up and then right before the merger. Once it merges, you see a dumpito for a few weeks, and then the long-term value is revealed. But why exactly would somebody want to buy the SPAC, the CCCX? Well, when buying CCCX, the pre-merger entity, well, investors have optionality. If the quantum build-out goes well, upside could be multiple times the current market value. The market is still in the early innings for scalable quantum hardware plus sensing, and so extreme upside potential can be realized over the years. But also, the SPAC has cash in trust, and the merger proceeds give the combined entity capital to scale. So once CCCX merges with Inflection, taking it public, well, Inflection's going to have all this extra cash. And that's going to help it accelerate its trajectory. If one believes quantum eventually is going to become a foundational infrastructure theme, or like I do, simply believes there's going to be even more investment over the coming years because of all of the trends that we're seeing, well, that means that CCCX might very well have favorable leverage to that narrative. AKA, it's one of just a few players that is really embedded into the quantum ecosystem. So anyways, in totality with CCCX, it's a very high risk play, and it is a very high potential play. If you believe in the long-term quantum sensing AI infrastructure theme, and you're comfortable with that elevated risk, early stage, SPAC, and execution dependent, well, CCCX does give you a very volatile but leveraged stake in the future there. A lot of people say, you know, Charlie, you shouldn't be talking about quantum stocks because they're very volatile, they're very early stage, and there's a lot of risk with them. Maybe you should talk about something safe like Home Depot or McDonald's. Remember, volatility and risk, those are the prices that we pay for outperformance. I like the McDouble and the Big Mac and the little Egg McMuffins as much as the next guy, but I'm not buying those expecting huge upside. maybe in terms of the waistline, but not in terms of my portfolio. We've always been about presenting lopsided, asymmetrical, crazy upside potential and identifying the risks and being aware of those risks and strategizing to manage those risks. So anyways, that is something to consider there. Okay, main entree. So it just came out that a firm connected to the president's son just got a major Pentagon contract, and that's this company, UMAC, which is Unusual Machines Inc. Now, UMAC, UMAC, is a small U.S. drone company that is benefiting massively from new laws pushing American-made drones. As the government bans Chinese-made drones and parts, UMAC stands out as one of the few companies already producing U.S.-approved components like motors, controllers, and cameras, and it produces all of this at its new factory in Orlando, Florida. With its popular consumer brands and its official approval for government and defense use, UMAC is set up to become a key supplier as the U.S. builds out its own drone industry over the next few years. Now, I think it's very, very important that you understand the timeline of what's happened with this stock. So November 5th, 2024, President Trump gets reelected. November 27th, 2024, Donald Trump Jr. joins UMAC. Company publicly announces Donald Trump Jr. has joined as an advisor to the company and confirmed that he already owns shares. He explains the importance of onshoring drone production. Ending of 2024, The Guardian and Market Watch and some others published articles highlighting Trump Jr.'s involvement and the company's link to the U.S. military drone ecosystem. Public awareness of UMAC surges. June 4th, 2025, Unusual Machines signs a lease for a 17,000 square foot Orlando drone motor factory, substantially upping domestic onshoring. June 6, 2025, Trump's U.S. executive order to accelerate U.S. drone production is signed. And then October 24th, 2025, Financial Times reports UMAC winning a contract to supply 3,500 drone motors and option for 20,000 more to the U.S. Army under a Pentagon order. This reporting has been going viral on the New York Times, on, of course, this Financial Times outlet, and so on and so forth, meaning that there's a lot of eyes now looking at this company. And even with that aside, this executive order is a big win for the company. How does this order help UMAC? Well, for one, the executive order explicitly emphasized sourcing from NDAA compliant US-based manufacturers, a direct tailwind for Unusual Machines, which was already positioned as a made-in-America drone component producer. This alignment with federal procurement rules gave UMAC a fast lane into defense and homeland security supply discussions. Number two, demand surge across federal and state agencies by mandating federal departments like the DoD, the DHS, FEMA to accelerate U.S. drone fleet modernization. This order unlocked new streams of RFPs and small business contracts. UMAC, specializing in drone motors and component integration, suddenly had a much larger addressable customer base overnight. We love Uncle Sam creating a massive customer base for companies. That's an easier business model. Almost any other business, if you're just operating in the free market, you kind of have to go out there and you have to convince people like, we have the best product. When you see these companies that Uncle Sam is just kind of creating their own market for, well, that's a big de-risking, and that means that the stock should trade at a much bigger premium. Number three, investor and media visibility explosion. I believe you're going to see huge explosion of coverage on this stock. Number four, strategic leverage in supply chain acquisitions. The executive order accelerated consolidation in U.S. drone manufacturing. UMAC leveraged this policy environment to finalize its acquisition of Rotor Lab and pursue other component integrations, strengthening its vertical stack and supply chain control under a very favorable policy umbrella. And then number five, validation of UMAC's core narrative. So before the order, UMAC's thesis, reshoring drone production, sounded aspirational. The previous administration didn't really care that much about this goalpost. However, with this new administration and after this new order, it's become national policy to onshore drone production. The whole business model is now national policy. In my opinion, this alone suggests a massive re-rating potential. Much higher. UMAC is at the intersection of policy tailwinds, defense reindustrialization, and a surging drone economy. And if it continues scaling, securing even a fraction of the defense procurement wave, and builds its brand as the face of U.S. drone manufacturing, well, obviously...
Okay, we talked about drones. Now we're going to talk about batteries. So... energy storage systems. Grid-scale battery energy storage systems. They are connected to Tesla. FONC Florence Energy. September, $21. That's December, actually. Okay. Pretty gnarly earnings, but came back. It was Q4. In Australia. They're also in North America. Fluence. Okay. So what happened in Q4 2024 earnings? Bad. Specific contract wins. Revenue was up. Gross margin, net income. Guidance was down. Okay. Energy storage systems and batteries. Pretty exciting. Notable contract wins. Ukraine, $100 million. Australia got $500 million. Okay. Here we go. There is one stock that is about to skyrocket. The ticker is FLNC, Fluence, and they do energy storage systems. So battery, grid, infrastructure. As we get more renewables, batteries can help smooth out the intermittent power from wind only blowing during the day. Well, actually mostly at night. Solar only shining during the day. This company, FLNC, has contracts in the hundreds of millions of dollars, not just around the US, but in other countries such as Ukraine and Australia. And their major competitor is Tesla, which means there could be a massive acquisition company opportunity depending on how much this market grows, which there doesn't seem to be any slowing down of battery storage, particularly as we add self-driving cars to the grid. So let's jump into the chart. This is not financial advice. This chart looks awesome though.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is the Fluence chart, and it's pretty awesome. I mean, you kind of can't draw it up better than that at this exact moment. Anything could happen, and they do have earnings coming up, but not for a full month or 3 weeks basically at this point. So there's a clean opportunity right now. Volume's trailing off. That's what you like to see. You know, you don't want a bunch of selling volume. Speaking of selling volume, there was a bit of selling volume on this Q4 2024 earnings, which come out in early 2025. This is due to, they actually had a higher revenue, and they actually, they did miss on earnings a little bit as well. But the big thing was guidance was way down. So they guided lower, and since then they've recovered that loss and more, all the way back to this really important $22 level, which also coincides with their most recent private placement. So capital raise, money, in December of 2024, somewhere back in here. So once they get over that, those people who invested, who still hold shares, are going to be making money. So there's unlikely to be a lot of supply in the near term. So that's the opportunity for FLNC right now. And sure, they could definitely use some more money. So that offering could be repeated. But if you look at that pricing back in December 10th, okay, so that was right in here. The pricing was above the price of the stock. So the reason the stock went down did not have to do with what would be usually called a bullish offering, where the price is above where the stock is. Of course, the IPO a few years back was even higher than that, but you know what? A lot of companies were high flying in 2021, so this IPO result in mid 2021 is sort of par for the course in terms of stock price movement. Now, here's the beautiful chart. That has to be the level. I mean, 2150. If you really want to get granular, you could say it's exactly 2135, that which is basically where we're at, that offering level. And if we want to look a little bit more at why, you know, this company is so attractive, well, this is what they do. Energy storage, renewable storage applications, like, you know, big batteries. And they have all of like the monitoring, like smart meter sort of IoT, and basically make sure all these big business to business customers, they're in Virginia, but this, you know, this certainly sounds German, right? Siemens, whatever that word pronounces as. They do have big 100 million plus contracts in other countries, namely Ukraine and Australia. So this is sort of the connection to Tesla. You know, Tesla having bigger contracts, but that's not really super surprising. $3 billion for Tesla for this contract through 2030, so not immediately. And then New Zealand, 100 million, and then a deal in China for a battery storage station for $500 million. This is a big grid scale battery power plant. So as far as Fluence, this is the value, about 100 plus million in Ukraine, and then 500 million in Australia for sort of similar grid battery facilities. Not power plants, but they're very similar to the Tesla contracts. And essentially, how it kind of works is roughly you have some power plants, and you know the power has to match the power used at all times. And for wind and solar, that's a real problem because they're so flickery, basically. So batteries are needed for that. Now, as far as what's actually going to happen in terms of forward-looking revenue, doesn't really make that clear. This was the reason for the move down, this guidance lowering. Contract delays, competitive pressure. I don't think Tesla themselves is responsible for this exact lowering. They did report a 50% decline in revenue. So that is, you know, there you go. That's what a 50% decline in revenue does, as well as lowered guidance for the future. So still, the number of deployments is going up. Gigawatt hours is, that's a big, you know, gigawatts is the data center build outs are all measured in gigawatts, not in megawatts. They haven't actually built out gigawatts of data centers yet, but they're going to be in the next few years. And look, that's a lot of money, up to $3 billion in 2024 of revenue. So this is a multi-billion-dollar company. You know, this is the real deal. And if you look at the liquidity, it's significant. You know, it's $200 million a day. So there's nothing, I mean, there are stocks you can mess around with. You know, SLNH is a similar type opportunity, you could say, right now. But if you look at the liquidity, it's kind of there, you know, it's, what is this, 30 million? It's just a completely different scale. It's like, what is that? 30 million versus 100 million. It's like 3 times higher liquidity. And this just looks a lot cleaner versus that sort of penny stock activity. Even Dragonfly that I mentioned, you know, it's just not that liquid. It's 50 million, so it's about half as liquid as, and you can see what happens when a stock's super liquid. Sure, you can get euphoric moves, but you can also get absolutely caught with your pants down. So for that reason, I do think FLNC, you know, it was 10% a day. Still significant opportunity, volatility, which you need as a trader. And, you know, they're beyond that guidance. They do need some cash, but so far in the last handful of months, things are going well. So could Tesla, you know, pressure them? They could, but like I said, they could also be an acquisition target, which if that buyout is at a premium to the market price, that could get pretty attractive as a holder of the stock. Is it going to be like EA where it's the biggest leveraged buyout in history? Probably not, right? Probably not. But, you know, if you're holding a stock at a breakout level and, you know, you're holding it for a move like this, and then, you know, you never know, you might trail some shares for a buyout. It never hurts to be in a stock that sort of has that opportunity. Biotechs definitely have that opportunity, but biotechs are also difficult to talk about because there's all these PDUFA and phase trial dates and random, you know, a patient can develop some side effect and the whole company has to be basically, you know, made gone. The cash gets taken out. And sometimes they trade for less than the cash value, which is crazy. But this is not that. This is an energy storage company. They have a ton of revenue. They have a very understandable product, kind of like the Tesla Powerwalls that people have in like their garages, not just to charge the Tesla, but also like the Tesla charges them up. So it's kind of like having like an extra generator. So that's what they're up to. Obviously, a Tesla connection is a double-edged sword because they are, you know, maybe taking some of their opportunity in the future, but definitely growing the market as Tesla has done with their supercharger network. So this is the stock, FLNC. These are a few similar companies. This one I would be a little careful with. There's sort of a short report out on them, EOSE. But AES, Enphase, and QS. QS is a battery storage one that's super similar and recently had earnings. Seems to be holding up. Enphase is more solar related. It looks pretty garbage, but because it's more solar related, I don't know exactly how close of a connection was. QS definitely seems closer, and AES maybe closer as well. You can take a look at how that earnings reaction basically shakes out in a few days. If it's good, you know, it could help FLNC as well, but I think this flag looks so great. We could know nothing about everything we just talked about and still think this is attractive as an idea. So if you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to work with me, you know, hop in the Discord. I'll see you tomorrow morning. And you can go join that for $25. Try it out.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. What else we got left here?
The stock can go much higher. But what are the risks with this? I think it's very, very important to talk about the risks. I get excited about stocks on these videos, but I want to make sure that you're aware of the downside potential here because these are all very volatile and very risk-on stocks. Look, while this now has this relationship with the Trump administration, that could also be a downside in a couple of years, maybe after midterms if you get a bad result or after 2028, and these are things to consider. because the stock could sell off well in advance of a political shift. Stocks that are backed by the Trump administration and are moving favorably in the Trump administration are going to be the first to go down as policies revert. That's a specific type of political exposure that you don't get with every stock, but you're definitely getting with ones that are backed by the Trump administration in some way, shape, or form. It's also true that the next administration might go and reverse the American onshoring initiatives. It's true that many other countries like China can make drones way cheaper than we can, and there's a lot of politicians that would argue, let's just depend on China for a lot of these things, even in the defense sector, because we're going to be able to save a few bucks. I think that's probably a low risk because, quite frankly, it's crazy to put defense in China. But at the same time, I mean, there have been levels of that in American policy for like many decades. It was both Democrat and Republican regimes where you had this crazy offshoring of a lot of these rare earth components, for example, that are actually critical to our national security. So these are things to consider, and these are risks to highlight over the long run. That said, I do think that UMAC has way more pros than cons over the next 12 to 18 months because of these major policy tailwinds. So what about future potential catalysts? Well, Army follow-on contracts and DoD scaling, UMAC's initial award for 3,500 drone motors and components could evolve into a much larger multi-year procurement. The Army has already hinted at 20,000 additional units in 2026, setting the stage for recurring, higher volume defense contracts if deliveries meet spec. There's also the opportunity for more Blue UAS approvals. Each time a new UMAC product like flight controllers, cameras, or motor controllers gets approved under the DIU's Blue UAS program, it becomes far easier for government and public safety buyers to purchase it directly. Expect new listings to open wider procurement channels and more catalyst spiky McSpiky opportunities. And then, of course, you have policy tailwinds favoring U.S.-made drones. The June 6th, 2025 executive order to accelerate domestic drone manufacturing, combined with the Section 232 investigations into foreign drone parts, positions UMAC perfectly as a compliant American-made supplier ready to benefit from federal funding and procurement priorities. There's also the conversion of early wins into recurring orders. UMAC's $12.8 million defense order and commercial supply deals show traction. Consistent execution and performance could turn one-off deliveries into repeat programmable orders across the Army, Air Force, and law enforcement agencies. Vertical expansion into full systems, owning Fat Shark and Rotor Riot, which are the consumer divisions of this company, give UMAC a clear path to move beyond parts, creating complete FPV, ISR, and training drone kits built around its blue-listed components. That integration could potentially boost margins, simplify procurement, and further entrench UMAC into the defense drone ecosystem. So anyways, that is the bigger picture rundown on UMAC. Let us know what you think down there below. You have a high potential stock with also high potential risks and things to consider. That being said, after I'm done posting this video, we are going to go and alert UMAC calls in the Discord. So if you'd like to see those, make sure to join us with that first link down below. Anyways, that caps off today's video. Have a great rest of your day. We'll see you next time.
All right. No calls. No calls. Post-quantum cryptography. LAES. Supplying post-quantum cryptography. This is crazy. Okay, so their quantum name and they're shaping up and they just had earnings. What is going on here? This is wrong. I don't know when their Q3 earnings are, but that would be good to check. Quantum cryptography. Whatever happened to BTQ? That one's not doing so hot, is it? Quantum security hardware. Okay. Somehow Q3 became 1E. That's not right. What was their earnings release before March 19th, 2026. Come on. You got this. Oh. March. Alright, well, we're just gonna have to make do here. So, SealQ is the company. Quantum cryptography. Talk, big contracts, revenue, any connection to brand name companies or government entities that LAS has. Headquartered in Bridgewater Islands. Oh dear. Okay. What do they got going here? Direct offering at 7:50 October 15th. Okay. So that was all recently raised a lot. They've been raising a lot of money. Private placement at 750. Okay. Well, they did have some revenue. I'm not sure they're going to have a lot of contracts. But 100 million over the next 3 years. Post-quantum cryptography. Okay. Well, 5 million revenue a quarter. Okay. I think IONQ has raised $1 billion. Something like that, something crazy. You have $3 billion. Like, what in the heck? Makes access to consumers. Morgan Stanley and JP Morgan. Okay. Why is Heights Capital Management bullish on quantum? Quantum security, guys. If you have any questions, go ahead and drop those in the comments. Otherwise, we're going to wrap this up with breakdown on the one and only quantum cryptography name, SealsQ, LAES. Looks like they didn't make a statement. So, all right, LAES, SealsQ. There is one stock that is about to skyrocket in the next few days. The company is LAES. That's the ticker. The name is SealsQ. They are a quantum cryptography company, quantum security. If you saw the move on the quantum tickers, Rigetti, RGTI, IONQ, QBTS, QuantumScape, in September, those were crazy, 100% plus moves in under a month. LAES could make a similar move. It hasn't gone up quite like those have yet. Maybe it's because it's a quantum security rather than a strictly quantum company. This is not financial advice, but I think this is the next speculation name that could make the end of this speculation run after we've gone on an absolute bull of a market since April, and September was crazy as part of that. LAES could be, not calling it top, but this blow off move that hasn't happened yet. Let's jump into a little look at the chart and why I think this company's stock price is going to go up.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is Seals Q. It's British Virgin Islands is their incorporation, but they're in the same category. They're over $1 billion market cap, and you know they have hundreds of millions of cash. They're in the same category as IONQ, which has raised $1 billion through JP Morgan. So this is, and then Morgan Stanley as the investment bank for this 300 million. And you have to ask yourself, you know what? They're a $20 billion company with multiple billions in the bank that's going to last them years. I mean, this is what, 15 years or something crazy? So if that's the case, is it that crazy that they're going on runs like this? Maybe it's not that crazy. You know, it's not all about revenue, earnings, and sales. You can see these moves are not based off of earnings candles. RGTI, another one with a 100% plus move. I mean, this is almost 300%. It's absolutely bonkers. So there's one company, LAES, that sure, it had a move. It went from 2 to 6. It's 100%, but it's a smaller stock. It's setting up another flag here. And, you know, like it or not, quantum is the hot sector this year. It certainly was the hot sector at the end of last year as well. You can see what this company can do. This is completely unprecedented late December move in Seals Q. Why, right? No one really can say that it's because of what quantum's going to do, because even Jensen, the founder and CEO of NVIDIA, says, as of his most recent global technology conference, quantum is mumbo jumbo, right? So despite that, these companies are still super valuable. Who knows what post-quantum cryptography is going to ultimately end up doing, but this is almost like a Manhattan Project, like, you know, type of investment. And maybe it's just going to be for, you know, smart home, like your Nest Ring camera, or, you know, your Wi-Fi router, or some type of warehouse automation thing that Amazon ends up, you know, giving them a bunch of money to develop. It's hard to say, but it's also clear that there's a euphoric interest in these companies. So they're raising a ton of money. They are partnering with real companies that help them build out their technologies. And I don't know how real it is, but you have to just accept reality, you know, which is silly to say. And reality is that the market loves quantum companies right now. So sure, they're early deals. There's not a lot of dollar value terms, but these are serious partnerships. This isn't the US government, you know, that would be great. Seoul, Korea is, you know, there's still crazy innovation happening overseas. Of course, China is arguably, you know, ahead of us in some aspects of AI, you could say, because they have so much more power capacity. And that could extend to quantum too. Quantum might require huge amounts of power as well. So as far as contracts or deals for LAES, it's hard to really quantify. Like 30 million digital certificates. Is that a lot? Is that easy to provide? Is that not a lot? You know, these sort of like security deals, it's kind of like a software as a service model where maybe this is, the next big thing. And maybe $100+ million for R&D is totally going to pay off. But I don't know who's paying for it yet. Even Facebook, right? The big story with Facebook was that they're an example of a company that can just grow like a weed and they don't need to make money because they'll eventually make money. That's the lore anyway. And the reality was they were actually making money very soon. They were selling ad space very quickly, and they just needed money for servers, right? That's the sort of, emblematic story of a Silicon Valley startup. And this is a hardware startup. This isn't a software startup. So I don't think they're going to get that same leeway. But these are kind of all the angles you have to come at this with, because regardless of these massive numbers, future revenue opportunities, $100 million revenue opportunities, they still need to actually book some revenue. Pipeline is a very distrusting, flexible word. And this is how much money they're actually making, $5 million a quarter. $5 million a quarter for a $1 billion market cap company. And they're one of like the smaller market cap quantum companies. So they do have a massive loss, 20 million. It's only massive as compared to their revenue, which is about half of that as of last year. And so now you just have to say, is there any risk reward in this quantum name versus the other ones? And you could say, well, do you want to invest in the hardware? Do you want to say security is a bigger growing field? I mean, there are companies like CrowdStrike and Zscaler that are doing awesome. I mean, these are big moves. CrowdStrike just broke out over this 500 and change level. And maybe you have to start, I mean, their other peer Rupert isn't doing so hot, but maybe you have to see SEALSQ, LAS sort of in that bucket as opposed to in the quantum bucket. It's hard to say exactly how to value a company that has 5 million of revenue and also trades $500 million a day, except to just say it's a speculation name, it's a trading vehicle. $500 million a day, though, means you can put 5 million in with a click of a button. And so that's probably not a great idea, but it is important to get a sense of how real this company is. And so in terms of realness, are they sort of connected to NVIDIA? Not really. They're trying to connect themselves to NVIDIA, mentioning NVIDIA's GPUs to say that their strategy is going to basically be interoperable or useful with them. So we'll see what actually happens. But post-quantum technology is kind of mental, considering that quantum itself has not even been implemented outside of labs. And I don't even know how labs are using it outside of, what do people say? It's used for Bitcoin security, and that's the use case. So we'll see. There's not a lot of fundamentals to look at here because there's basically no connection to the government and no connection to major companies and no revenue numbers. But they're definitely the head. I mean, there is real research that goes on in these labs, and if it's going to happen, it's going to be this company. So there's pretty much no other fundamentals to look at. All you can really say is, what's the dilution risk? Is this revenue going to go up? Is this net loss going to disappear? And is some crazy acquisition possibly going to happen? And, this is the dilution risk, right? There's a high risk, meaning they're going to need to raise more money because they have 400 million and their arguably father company has 3 billion. So we'll see what happens. We'll see if these warrants get exercised, and that has a dampening effect on the share price. That's something you have to be aware of. but it doesn't seem like it's having a real problem. They exercised $4 warrants for 70 million in October of this year. So you can see where that price is. That's down here, and it's holding up. So there's enough buying to overpower the dilution. So that's kind of the story with these penny stocks. That's where they get super interesting, like back here. And so if you can hold this for a few weeks, get a big 20% move up, that's kind of the name of the game and why this is a speculation name of interest. If you like these ideas, hit that like button. Sometimes speculation is where the best opportunity is for maybe 5% of your portfolio. Notice I'm not talking about biotechs, but I'm also not talking about, gambling on options before Amazon earnings. We'll see how that Amazon closes out tomorrow. It just reported today, and it looks good so far. But this is, ideas of stocks that are going to go up after, not that just went up, on earnings, and then I'm talking about them. So I think LAES could go up after I put out this video, and hopefully before you see it. If you want to see these videos before they come out, hit that join button. See if that helps you out. It's not financial advice, but hope it helps you. And good luck.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.